something quietly changed the math on XRP in the last 6 trading days. Big money moved more into these products in 6 days than it did all first quarter. Almost nobody is connecting the dots. So let's break it all down. Here is the single fact that frames everything else in this video. US spot XRP exchange traded funds pulled in $64,470,000 in 6 trading days, starting April 10th. March was the worst month those products have ever had. $31 million flowed out. The first monthly outflow in their entire history. That was 4 weeks ago. In 6 days this month, the market did not just erase that damage, it added a $33 million cushion on top of it, and it is not happening in isolation. 9 days from today, the two bodies that actually set the rules for XRP's year are both in the room at the same time. The Federal Reserve, the people who control American interest rates, meets on April 28th and 29th. Futures markets give them a 99.3% probability of holding rates exactly where they are. The decision is not the story. The language Chairman Jerome Powell uses is the story. In that same 9-day window, the United States Senate Banking Committee is targeting a vote on the Clarity Act. That is the bill that would make XRP a federal commodity under permanent law, the same legal category as gold, oil, and Bitcoin. 2 decisions, 1 9-day window, and institutions started buying 6 days ago. Here are the names pulling the trigger. Bitwise, the largest crypto-dedicated asset manager in the United States, led the group with $6,230,000 in a single day. 21 shares pulled in $5,430,000. Franklin Templeton, a firm that manages close to $1.5 trillion globally, pulled in $5,300,000. On April 15th alone, those products together pulled in $17,110,000 in one trading day, the largest single-day inflow in 10 weeks. Total assets under management across all 7 US XRP ETFs has climbed to $1.27 billion, a 3-month high, and it is not just the ETFs. On the blockchain itself, the picture matches. CryptoQuant, the on-chain analytics firm used by institutional traders, tracks a metric called whale flow. That number just hit a 10-month high. Wallets holding between 10 million and 1 billion XRP are buying more than 11 million tokens every single day. Meanwhile, exchange reserves, the XRP sitting on exchanges ready to be sold, have fallen 55% since late 2025. Think of the exchanges as a tank. More than half of the selling ammunition has already drained out of that tank into cold storage wallets, and the draining has not slowed down. Now, at this point, you might be thinking, why isn't the price exploding? Fair question, and you deserve the full answer because otherwise I am just selling you hopium, and this channel does not do hopium. Let me show you the data that actually makes me hesitate. 60% of all XRP in circulation is still held at a loss. That is roughly 36.8 billion tokens according to Glassnode. Every time the price climbs toward those break-even points, those holders become sellers. Think of it as a waiting room, 36 billion coins sitting in a waiting room where the exit sign only lights up when price reaches the owner's cost basis. That is overhead supply that is not going anywhere on its own. Second, open interest in XRP futures has collapsed 73% from its peak, $10.8 billion down to $2.4 billion. The speculators have walked out. Almost nobody is positioned for a major move in either direction right now. Third, retail investors have been net sellers of XRP for 6 straight months, the longest selling streak since 2014, 12 years. So you have a market where big money is arriving and small money is leaving, where the exchange supply is disappearing and the overhead is not. Thin order books, concentrated ownership, almost no crowd. But here is what almost no channel has covered properly. And if you have been holding XRP for years, waiting for the moment when Wall Street stops treating it as not quite real money, this is that moment. On April 2nd, Kroll Bond Rating Agency, one of the Wall Street credit rating firms officially recognized by the Securities and Exchange Commission, assigned an investment-grade BBB rating to Ripple Prime. That is Ripple's institutional trading desk, built from the $1.25 billion acquisition of Hidden Road last year. Why does it matter? Because pension funds, insurance companies, and regulated banks have internal rules. They can only do business with counterparties that carry specific credit ratings. Before April 2nd, doing business with Ripple required an internal exception. After April 2nd, it does not. Ripple now fits inside the standard framework. But here is the line that should stop you. In its official rationale, Kroll specifically named Ripple's holdings of over 40 billion XRP as part of the company's capital position, alongside the $5 billion in cash. A Wall Street credit agency, the kind that rates municipal bonds and corporate debt, just counted XRP as corporate capital. In writing, for every year you have been told XRP is not a real financial asset, that it is just crypto. That single sentence in a credit assessment is the inflection point. The people whose job it is to decide what counts as money just put XRP in the counts column. If I stopped here, you would walk away thinking this is the cleanest setup in crypto, and I would be hiding the most important part of the video from you. This channel does not do that. So let me show you the force that is overriding every single one of those catalysts right now. Because without understanding it, everything I just told you is just noise. Think of macro conditions as gravity. It does not care how strong your rocket is. If gravity pulls hard enough, the rocket sits on the pad. The Federal Reserve is that gravity right now. Rates sit at 3.5 to 3.75%, and 7 members of the Federal Reserve Committee now project 0 rate cuts for the rest of this year. Back in December, most of them expected 2 cuts. That is a structural change in roughly 12 weeks. The reason is in the inflation data. March consumer prices came in at 3.3% year over year, up from 2.4% in February. Inflation did not cool, it accelerated. Energy prices alone jumped 12.5% compared to a year ago, driven directly by the ongoing Middle East conflict. So on April 29th, the Fed holds. That much is locked in, but Chairman Powell steps up to the microphone at 2:30 Eastern, and his language does the actual work. Watch how he describes inflation. If he signals the committee is still open to cuts later this year, risk assets including XRP catch a bid. If he emphasizes that inflation is persistent and pushes the cut timeline further out, the same assets get repriced lower. That is not analysis, that is mechanical. Every institutional trading desk has those signals preloaded. And that gravity is why XRP trades around $1.43 despite everything I just walked you through. Now I want to show you the math I have not seen anyone else in this space run. Because it reframes the entire setup. First quarter of 2026, 3 months. January pulled in $15,590,000 into XRP ETFs. February pulled in $58,090,000. March lost $31,160,000. Net inflows for the entire first quarter, $42,520,000. That was 3 full months of institutional activity. 3 full months of banks, pension funds, and asset managers deciding how much they wanted to allocate to XRP. Now take just this month, from April 10th through April 17th, 6 trading days. XRP ETFs absorbed $64,470,000, 6 days against 3 months, and the 6 days won. That math tells you something specific. Institutional interest has not been slow. It has been dormant. And when conditions shifted, when the Middle East oil panic started cooling on a ceasefire, when the Clarity Act coalition solidified on April 9th with Coinbase CEO Brian Armstrong, Treasury Secretary Bessent, and the Securities and Exchange Commission chair all publicly endorsing the bill within hours of each other, the switch flipped. This is not trickle in demand. This is demand that was sitting ready to deploy and deployed all at once. The accumulation underneath the boring price action has been the real story all year. What started 6 days ago is the acceleration phase of that story. If you are still with me at this point, good, because this last part is the only reason I made this video instead of just writing a social post about it. 4 things you need to watch over the next 2 weeks. If they line up, you see the move before the rest of this market does. Signal 1. Senate Banking Committee Chairman Tim Scott announces a Clarity Act markup date. As of April 17th, he has not. He told Fox Business on April 14th that 3 issues remain open: stablecoin yield language, DeFi provisions, and all Republican votes on his committee. If a date lands, expect a measurable price reaction within hours. Signal 2. Daily XRP ETF inflows sustaining above $10 million. 6 consecutive days have already cleared that bar. If it continues through the Fed meeting, institutional conviction is confirmed. If daily flows drop under 5 million or turn negative, the rally loses its fuel. Signal 3. The $1.45 price level, that is the wall. A clean break above with real volume opens 150, then 160. A failure below 135 invalidates the setup and sends price back to 128 support. Signal 4. The Federal Reserve statement on April 29th. Powell's language is the single biggest mover of risk assets for the next 6 weeks. Jeffrey Kendrick, head of digital asset research at Standard Chartered, projects XRP reaches $2.80 by year-end if the Clarity Act passes and oil stabilizes. That is more than 100% upside from here. If the bill stalls and Middle East oil panic returns, the same analyst's downside scenario pushes XRP toward 82 cents. 2 outcomes decided in the next 2 weeks. So here's what you actually take away. The market spent 3 months arguing about whether institutions cared about XRP. 6 trading days this month answered that question in hard dollars. The only remaining variable now is whether the Fed and the Senate cooperate with a calendar that is already moving. Tomorrow, watch whether Senator Tom Tillis releases the revised stablecoin yield text. That single document starts the 48-hour clock Tim Scott needs before he can set a markup date. If Tillis goes Monday or Tuesday, we could have a markup on the calendar by Thursday. If he stays silent, every day of delay pushes the math closer to the May deadline Senator Moreno warned about. I will have it either way. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Fundamentals set the destination. Macro sets the timing. Stay sharp. Stay informed.